This is Optimal Finance Daily, episode 1123, On a Mission to Refinance America by Sam of FinancialSamurai.com. And I'm Dan. I am your host here at Optimal Finance Daily. A very happy Monday to you. And I've got a very timely and relevant post today from Sam of Financial Samurai talking about the current state of the economy today with everything that's going on with the coronavirus. So let's get right to that as we start optimizing your life. On a Mission to Refinance America by Sam of FinancialSamurai.com. Attention! Mortgage rates are at all-time lows in 2020 thanks to the coronavirus market meltdown. We must all refinance now. Check out Credible, my favorite mortgage marketplace where pre-qualified lenders compete for your business. You can get competitive, real quotes in under 3 minutes for free. Mortgage rates are down to all-time lows. When banks compete, you win. Recently, I've been on a mission to tell anybody who will listen to refinance their mortgage. I get nothing in return, just the satisfaction of knowing that someone who isn't a rate hawk like me can get a nice kick in the pants to save some money every month for the next 5 to 30 years of their lives. Nobody gave me a kick in the pants when I locked in my refi, which is why I had to pay 0.125% higher than I should have because I was unsure and waited a little too long. Banks have promotions all the time, and your duty as a borrower and saver is to identify which banks are offering the most attractive terms at any given moment. That bank is Citibank, with mortgage rates often 50 basis points or 0.5% cheaper than any competitor out there for 5-1 and 30-year mortgage products. Citibank is on a rampage to build up their loan book again. As patriots, it's our duty to spread the word and make sure we don't fall off a cliff again. The biggest hurdle in refinance land. I've spoken to several people who are having a difficult time refinancing simply due to the loan-to-value ratio of their house. For those who don't know, banks generally now have a maximum LTV of 80%. In other words, if you have a house worth $1 million, you cannot borrow more than $800,000, which is $800,000 divided by a million, which equals 80%. An LTV of greater than 80% is viewed as too risky in this more conservative day and age. Banks may still lend you money, but at a much higher rate than you may like. In many areas of America, although housing has shown over 13 consecutive months of year-over-year increases, values are easily 10 to 20% lower than the peak. In the example a moment ago, your loan-to-value percent rises to 100 if your house value falls 20%, given your mortgage of $800,000 equals the value of your house. In this scenario, what are you going to do to take advantage of these blockbuster low interest rates? If you love your home and plan on staying in it for a long time, you may simply want to pay down your mortgage to make your LTV 80% or lower again. Here's a great example I modified from a Wall Street Journal article highlighting the trend of putting more cash in your home. Value of home, $910,000 from $1.1 million just a couple years ago. Current loan balance, $809,000 on a 30-year fixed mortgage at 6%. Loan to value, $809,000 over $910,000, which equals 89%, which is too high. Current monthly payment, $6,398. Cash paid at closing to retire current loan, $80,000. New loan terms, $729,000, 15-year fixed mortgage at 4.375%. New loan to value, $729,000 divided by $910,000 equals 80%, which is compliant. New monthly payment, $5,530. Monthly payment savings, $868 per month, $6,398 minus $5,530. Return on the $80,000 investment, $868 divided by $80,000 equals 10.4% return annually for 5 years, and that includes both the principal paid down on the new, shorter-term loan and the monthly savings in loan payments. I don't know about you, but I would throw all my money at an investment that guarantees me 10.4% annually. 10% is what Bernie Madoff promised, and he built a $50 billion empire. Hence, the key variable is whether you want to stay in your house for 10 or more years and whether you have the cash on hand ready to pay down your mortgage and refinance. Conclusion. The fact that more people are injecting more cash into their homes tells me that people have become conservative with their finances and are looking for as close to sure things as possible. If you are tying up tens of thousands or more dollars in an illiquid asset, you're also showing that you are more confident about your financial future. It's unfortunate that not everybody who owns a home can take advantage of current low rates without having to inject more cash. But if you are adamant on taking advantage of the current low-rate environment and plan to stay in your house indefinitely, then it behooves you to pay down that mortgage and increase your disposable income. Your budget will thank you in the long run, and America will thank you further. You just listened to the post titled On a Mission to Refinance America by Sam of FinancialSamurai.com. And really quick, how would you rate your skills with writing and business communication? After all, spelling or grammatical errors make your writing look sloppy. You don't want to appear careless by not knowing the difference between THEIR and THERE. Now, if you're looking for a digital writing assistant, Grammarly does much more than help you catch basic spelling mistakes. Grammarly works across different platforms and makes corrections in real time to help you communicate clearly and effectively. And if you want more insights, Grammarly Premium gives you advanced feedback on word choice, punctuation, and more. One of my favorite features of Grammarly Premium is the Goals option. You can select the type of audience that you're writing for and the domain your document falls under. For example, are you writing an academic paper or a casual blog post? Grammarly will adjust its suggestions and conventions based on your selection. Grammarly also makes plagiarism checks a breeze too, so you can rest easy knowing that you're not passing off someone else's work as your own. Grammarly is the perfect writing tool for anyone who wants to stand out with every word. Get 20% off Grammarly Premium when you sign up at Grammarly.com/OFD. That's 20% off Grammarly Premium at Grammarly.com/OFD. GRAMMARLY.com/OFD, and I have that linked in this episode's description. And as you can tell, we are still going, recording and publishing episodes each and every day across all 5 of our podcasts as we get through this pandemic, and we're going to keep going as long as we are able to. Dr. Neil of Optimal Health Daily has his PhD in public health, and he did a Q&A episode about the coronavirus in episode 960, so you can check that out for his opinion. And then Greg of Optimal Living Advice did an update, more on the side of psychology, which was right around episode 55. Other than that, we likely won't cover much of what's happening with the pandemic, except for articles like today that might give practical advice about what we should do in times like these. In any case, wishing you and your loved ones the best as we slowly get through this together. And I will leave it there for today. That's another Monday show for you. Hope you enjoyed it. Hope you have a great rest of your day and start to your week. And I will be back tomorrow reading to you. That's where your optimal life awaits.